we'll be taking a sell. I'll do a live trade for you so you guys can understand how I'm doing it as well. But we want to factor in all the information we have here as well. So I've got to mention the Bollinger Bands, which are here. Okay, the more they expand, that means there's more volatility within the market. And as they begin to go narrow, like here, it means the market's settling down. And then until suddenly someone sells it, it breaks out the Bollinger Bands, then obviously everyone else follows suit and they start selling it as well and copying what's going on. Until, as we see here, it's been oversold. And what we do, we come in, we do a cheeky trade, just like this. And there's actually niche ways, there we go, so hopefully it's going to go. So hopefully price will push up. But anyway, going back to this, it's been oversold. The relative strength index, the RSI, look how low it is. It's dropped below 30. That's telling me the buyers are going to come back in. As you can see, we've got buying pressure now. People are pushing the price up. The price here has been pushed up. Obviously, I should just be taking sell opportunities, but I couldn't pass this one, seeing as there's a lot of support as well down here. Now, looking through my questions, so we're talking about market sentiment, getting an idea of the market. I'm going to be giving you a strategy as well at the end of the video, which you can follow using the Bollinger Bands. So it's simple for you to trade, and it also corresponds to what I've been talking about as well. Okay, now, so here we have the market sentiment. I've got to mention, it's a gauge. It helps the traders indicate which way the market's moving, okay? Imagine you've woken up Monday morning and you don't know which way the market's going. Well, good job you got the market sentiment, because you can look at here and say, well, I think it's going to be going down. Here it's been selling quite a lot, so I think it's going to continue what it's been doing. So essentially what you can do is just follow, what's been going on here. Now, so we've talked about what they're used for. So now we're going to be going on to the candle itself, so you can understand, the candle when we talk about a candle. So when we have a candle, we have typical candle formation would be, say, this, okay, and then it's pushed up, buying pressure, and it's pushed up like that. Okay, now if we had a candle like this, so the inside of a candle would be, this would be red. The candle which is formed would be green, okay? And to us, this would indicate an extremely likely chance that the market's going to be driven up, real quick. So we need to get in on this trade, okay? So just using these two candles, I could tell you that the market is likely to be going up, okay? Reason for this is, and I'll explain the candle as well. So I'll explain the candle. So we have the body of a candle, which is this big block here, okay? We also have the wick, or it's called the tail, which is this line here. Now, when we look at a candle, we can use this, just the candle information. It's called price action, okay? So I'll put some links in the description where you can go to websites and look at price action. But when we look at it here, we can see, this line here is where price actually went down to, okay? But obviously there's some buying pressure. It's pushed the body of the candle back up. So price did go down here, okay? You can see where the line went. Price did go down. But before the candle finished forming, so before the hour was up, people started to buy it again, push the candle up. And then obviously it's given us shape here. It's given us like a hammer. And then the next candle we have is a huge red candle here. And that's in the bearish candle, which is indicating to us that the market's going to go down. Now, I'll quickly explain the difference between the green and the red and the different types of candles. So over here, to us, this would look like a bearish engulfing candle, okay? Now, the reason they're called bears is, the bulls like to drive the price up. Just imagine a bull being, just like a bull wants to drive the price up, and the bears are fighting it. They want to push it down. So the bears are the reds, bulls are the green. Now, so when we talk about candles, we can say, you know, over here there was a nice bearish candle, or you might hear people say, just down here there was a nice bullish candle. There was a bullish uptrend. They were driving the price up, and then when we use the information just from the candle, so I can look at this, I can see that a huge long tail has been formed. That indicates to us that suddenly price changed direction. There was selling pressure coming from the bears that then pushed over and transferred down to the next candle, and then slowly, as you can see, transferred down, 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 and pushed the market down. Now, you could have placed an end of day trade on that one, and for sure would have won that nicely, would have finished around here. So there are ways to trade this as well. And also going back to the Bollinger Bands, I forgot to mention that they are actually used, you can use them as support and resistance. And support and resistance essentially is, just areas where the market can't penetrate a certain price. So price will get stuck at a certain level. It will try to break through to form a new price level, but sometimes it can't make it. So just imagine, price is like a bouncy ball in a room. It's bouncing around until you throw it and you bounce it hard enough that it bounces, it breaks through the ceiling. Then it goes to the next floor and it forms a new one. Could break through the next ceiling again, or it could come back and break through the floor, break through the next floor, and then start again. Okay, so it's really simple. This is just support and resistance. Just imagine it like a ceiling and a floor. Okay, now that's support and resistance levels. Okay, so this is horizontally. So say for instance on an hour chart, I add a support resistance level here. Okay, so you can see it's been tested a few times. Price can't penetrate this level, so then it continues in its downward direction. So they were hoping to break through, push this and change it into an uptrend, so the market sentiment would be changing and saying it's starting to go up, but instead it remained bearish and it's continued to fall down here. Now what's really interesting is that these levels never disappear. Okay, so you can see I've drawn this line here. If we go round, we go back, you can see, there we go, it's been tested over here. It's been tested once. We go back again, it's been tested 1, 2, 3 times. You go back 1, 2, 3, and then almost tried to test it there, couldn't quite reach it. It's been tested again here. Okay, so I've got a video covering this. It will be on my channel anyway, so just search that. But I will post links to websites which explain support and resistance in more detail. I'm trying to keep this video as short as I can to explain as much as I can, because obviously I'm trying to make a crash course for you guys here. Now, we've covered a bit of price action, actually talking about the candles and what they look like. We're going to talk about price action itself here. So as you can see, price action is a movement of a security's price. Price action is encompassed in technical and chart pattern analysis, which attempt to find order in the sometimes seemingly random movement of price. Swings high and low, test of resistance, and consolidations are some examples of price action. Now, going on Google Images, they give us some lovely images here. Now, when we look here, you can see the pin bar reversal. I mentioned about long tails being left. Okay, so using information off the chart, we can actually trade off it very easily. Okay, it looks really confusing, I promise you, but it's very easy. When you go on here, you look at price. You say to yourself, price has been here. It's been down here for how many hours? 1, 2, 3, 4, 5 hours. Price is sat down here and it hasn't moved. So the likelihood of price moving up within the next hour is high. Okay, so we could look down here, price is moving up a bit. This is on the 1 minute chart now. We've switched to 1 minute charts. But we can look at price and say it's moved up. And I'll give you a quick example of placing a trade using reversal candles. So we can see it's got buying pressure here. It's pushed the body up. Okay, we'll wait for the new candle to form. Still got a bit of buying pressure, and now we're starting to go back down. So what we're going to do, we're going to go Euro USD. We're going to wait for a nice candle to form. So what we're essentially going to do, I'm going to say we're going to get in on this. Okay, and I'm confident this is going to win, so I'm going to place 2 on this one here. So just trading off the Bollinger Bands, you can see it hit the Bollinger Band here. We had a red candle form. That indicates to us that there's going to be a change in price movement, so it's going to be coming back down. Now we've had a pin bar reversal, so we're waiting for the candle to form, but it's extremely likely it's going to go down, so we're just going to wait and see what happens. So as long as the candle forms when it's red, price will then drop down. So it should look something like that as it goes down, if it forms as a red candle. There we go, next candle's forming. And we're just waiting for it to move. I need to actually see where my trades are. So they're both out at the moment, but I've got confidence they'll come back in because we know the market sentiment is in a downwards trend. So there you go. So there's a lot of downwards pressure on the markets. And as I mentioned, red candle closed. It gave us confirmation that the market's going to be moving down. And we've gotten in on the trade here. I'm just waiting for it to finish now. In a second when it comes through, and we'll watch price move as well. And this candle is going to close, and what's going to happen is that it'll continue. It should continue to move in this direction because we know over the course of an hour the market's been trending downwards. Okay, so that candle's closed. Both the trades won, so you can see profit for today so far. Whilst I'm making a video for you guys, there's 2 birds with 1 stone. But going back to this, so we've explained price action, we've explained the candles, what they look like, and we're actually going to look at some candles now. Okay, and I find personally, if you want to search any information about a strategy, about something to do with trading, always search on Google Images, because then you'll find a photo, you click on the photo, you visit the page, and then this is just an example, I've never even looked at the page, and then you can see all the information here and the person talking about the information there. So I might actually link this website after. As you can see, we have different candle formations. As I mentioned, that's a bull candle, that's a bearish candle. We have a bearish engulfing because the red candle has engulfed the previous candle, which was a bullish candle, and that would indicate to us that there's so much selling pressure that the market wants to go down. Okay, so now we have bearish tweezers. I've never even seen those before. I usually just trade the pin bars, so you can see they're also known as hammers. We have some shooting stars here, and essentially what these tell us is, like, it's quite hard to explain how much information we can get just from a candle and the look of a candle, okay? But I'm going to link some detailed websites. I'm going to link some good stuff here so you can actually view this stuff here. So I'm going to add this. I'm going to put the links in the description for us here. But going back, so now anyway, I think I've tried to cover as much as I can. Going back to support and resistance, it's not only horizontally that you have support and resistance, you actually have support and resistance in any angle essentially. So there's a lot more to this. I'm just giving you guys examples, but I don't want to cover support and resistance fully because it's going to be too much. So, but as you can see, price formed a sort of channel here, and a channel just means, how do you explain it? It's just basically moving like a river. Price is just flowing between down the river, say for instance, and price is broken out of the channel, and that means that it's unlikely for price to continue going upwards, because now it's broken out of the channel. It's broken the support, which is the bottom, okay, and the resistance is on top. So ceiling is resistance, support is the floor. It's pretty self-explanatory. But what we could have done on this trade, once the candle's formed, and it's extremely important, you wait for the candle to form, okay? Because so many times when I first started, I'll try and find an example here. Okay, here we go. So if I didn't wait for the next candle to form, so for instance, if I took the trade here, if I didn't know what would happen here, I would have said the market's going to reverse off the Bollinger Band because it's left a small tail there, a small wick. It's likely for it to start coming down now because it's broken out the price channel. Price is going to change direction. Okay, but that's not the case. The new candle formed. Obviously, price from here moved along. It dropped down to this to 1.25159. Then it pushed up. The bulls came in, pushed the price up to 1.25877, and essentially, you know, we would have got caught out. And it's quite hard to explain how important it is for you just to wait. It's just being patient, basically, and that's just from experience and talking to a lot of people. So here, for instance, you know, we want to wait. So if we took the trade here, okay, before waiting for the candle to finish, what would have happened? We would have seen 1, 2, 3. We would have thought that's a bullish engulfing pattern. Price is going to continue going up. But just before the candle formed, sellers came in. They started selling it. You can see it got squished, left with a nice long tail there, and then price dropped down. So I'm starting to waffle on and on, but I'm just trying to explain that it's important for you to wait for market to form. Okay. And now I've just remembered someone asked me to mention what a pip is because they found it really confusing when they first started. Now, a pip is essentially just a movement in the market, okay? So instead of saying I bought price at what I got in, I sold pound against the dollar at 1.24200, and I took profit at 1.24 100, okay? In your heads, when someone's telling you that, you can't be bothered to work out. It's too complicated. So what traders say, they'll say, you know, okay, so I shorted this. So when you hear traders speak, they have a lot of jargon, calling, you know, currencies different names. And they also say, they'll talk about pips, and it might confuse you at first, but it's extremely easy, so I'll explain it. So what we do, a pip, as you can see here, this is the movement of the market which we wanted to move. The easiest way to work out a pip is go here to this icon here where it says short, or it should say long position. You click long position if you want to work out how much the market's moving up, or if you want to short the position to work out how much the market's moving down. Now, once we've worked out where we want price to move, we look at the number. It says target 100, okay? Now that's not 100 pips. We move across to the right, and you can see it says 10, okay? So what we're looking at is 10 pips, essentially. That's all we're looking to catch. Not much, but it's still a good movement, okay? So it's not 100, it's 10. You've got to keep that in mind. And so this is used for Forex, but you can use it to work out, you know, when you're trading. I'm just looking at this here as well, and we can trade off the average there. So I'm going to take another put. Oh, that's the wrong one. Pound against the dollar. Oh, wait. We're going to wait for the candle to form as well. And we'll see if we can get in on the trade. So there we go. It's broken through. So I almost lost some money on that one because I was getting too hasty. I broke my own rule. But we're also going to do some live trades. I'm going to show you the strategy for using the Bollinger Bands and how to actually accurately and successfully trade. We'll just wait for this to form, just so I can squeeze in one last trade. And then we'll move on to the actual Bollinger Bands itself. So what I'm waiting for, so I'll tell you. So this green line in the middle is the 20 period moving average. And as you can see, the candle, the price has used this as resistance. It's used it as support. It's used it as resistance. And looking here, I was going to try and take a trade based off of that. I was going to say, you know what, it's going to reverse off of the moving average, 20 period moving average. It's going to come back down. I'm going to be clever and try and make some money off of that. Okay. That's my thinking. That's what the thought process that's going in my head. Now, obviously, we all know there's a lot of selling pressure. We look back here, you can see this would have been used as support. This is being used as resistance. We're going to be cheeky. We're going to place a 5-minute trade. And I'll show you a little trick you can do. So you enter the trade, you cancel the trade, you enter the trade. And the reason I do this is wait for the price to give me the best option to enter. You can see it's still rising. Okay, so now that indicates to us that it's going to go up to the upper Bollinger Bands. It's going to try and hit that. We can also see some slight resistance coming in at this angle here. So on the 1-minute chart, you really want to avoid trading support and resistance on the 1-minute chart because it moves so much it's not accurate, but it still gives us a slight indication as to what might happen. So as I mentioned, we're coming in, we're coming out, trying to get the best price. So I've placed a put, which means it's going down. The market's going to be going down within the next 5 minutes. And there we go. We've had, so as I mentioned, we're just trying to get in at the best price. As soon as it drops, I'll hold it and I won't cancel it, okay? So as I mentioned, wait till last minute. You cancel the trade to get the best price option. Okay, so it might be a bit boring to watch, but it's the way to do it. And we just missed that because I was looking at the time. There we go. Okay, so now we just leave it like this. As you can see, we've got bearish candle. It's just about to form. There we go. So we've got some bearish candles coming in. So now we just leave it. There we go. It's starting to move downwards. And I'm estimating that it's going to take 5 minutes for this candle to get to about, so we've got 1, 2, 3, 4, 5. I'm saying it's going to drop to around there. Obviously, we don't know exactly how far it's going to go down, but I'm just giving a rough estimation. And if it loses, we'll still be up because we're in quite a bit of profit. But anyway, going back, so I'm gonna move on to the next part, and I'm going to actually show you how to trade the Bollinger Bands. And then hopefully by the end of this, you'll have a good idea. You'll be able to use the resources and materials I've put in the description for you, which will be extremely useful and will help you trade and help you make money as well. So I'll be back in 2 seconds and I'll be able to sort it out for you.